So we're ready to roll at any point in time.
Cool.
Clear your throats. Let me clear my throat. All right, guys. So hello, everybody. Thanks for joining us today. My name is Lou Lane. I'm with Primary Residential Mortgage. Have some very special guests with me today. Get some of the compliance things out of the way. My NMLS number is 322013. With that said, again, special guests. I have JP and Brianna with me, the Peters Group.
What's going on, guys?
Introduce yourselves.
Hi, Jay Peters, owner of Relentless Real Estate with my beautiful wife, Brianna.
That's my intro. Thank you.
And that's her. That's how it goes.
Boom.
Yeah. So Relentless Real Estate, we started it together. Yeah.
Well, good deal. How long have you guys been in real estate?
Just about 4.5 years for me.
3 years for me.
And what did you start out doing, Brianna? I know you were doing some other things prior to getting on the sales side. What were you doing prior?
So I started as an unlicensed sales associate for a high-producing broker. So I learned a lot before I even got licensed.
Nice.
And then once I got my license, I moved over to transaction coordinating. And I've pretty much been doing that since.
How'd you like coordinating?
A lot better than I thought I would, and actually a lot better than producing.
You're more of a detail person. That's what it says.
Phenomenal.
To me.
Phenomenal
All about
at
the
it.
details, right?
I try. See, and that's why this works, is because I like details, and I like the paperwork, and I like the back end of stuff,
Nope.
and he's the
Not
face.
me.
50-50 right
Yeah.
there.
So
Hey,
it's
bro.
like-
If I can get away from the paperwork, I would gladly do it. Like, you want to buy a house? Yeah, let's do that together.
Teamwork.
Come on, guys.
Teamwork makes the dream work, right?
Yes, that's right. That's how it works over here, baby.
Good deal. I can appreciate that. So, and you, JP, you've been on the sales side the entire time? Real
Yes,
estate?
yeah. So originally started at a big box store here in New Mexico, and I wanted to do the lone wolf thing. But man, you get out of real estate licensing and pre-licensing classes, and you get licensed, and you kind of sitting at a desk. What do I do? How do I get business?
I was going to ask you, what do you think your biggest hurdle was when you got your license and sat down at your desk? What happened then?
Honestly, man, a lot of unguided and misguided directions. So, today I'm going to post something on Facebook, or, hey, let me talk to these people. I wasn't real big on like, okay, let me go out to events and just introduce myself to people. And, I was kind of sitting back waiting for things to happen. And then I realized, like, yeah, that's my biggest mistake.
Waiting.
Yeah, waiting for something to happen and figuring out what I should do on day by day instead of running it and creating a business plan and running it like that every single day.
Well, then therefore, the leadership would have been a big thing, right?
Absolutely.
You would have had some kind of, I don't know who your QB was or leadership when you first started, but it sounds like leadership at day one would have made a big difference.
Oh man, and yeah, when you're at a big box store, that's kind of the way it is. You're a number on a desk,
and a pencil and paper, and like,
here you go,
you're
man.
off
Here's
on
your
your own.
desk. Yeah, set up, do your thing, come in whenever you want. And it's when you come from a structured. I managed a telecommunications store before that, so I came in from structured schedule and go to lunch on certain time. And you're like, oh, I get to do what I want now, whatever I want.
Which is sometimes nothing because you don't know what to do, right?
Exactly.
Without that structure.
Exactly. Yeah.
Good deal. So then you guys, obviously, as a married couple, formulated, came up with your own now brand at Relentless Real Estate. Tell me a little bit about that and how you guys came up with it.
That's this genius over here. My
Brianna,
beautiful genius.
how'd you come up with it?
Honestly, as far as the logo goes, because we get asked about the logo a lot, it's going to sound so cheesy, but I honestly had a dream about it. Like, I saw the logo
That's
in
real.
my head.
That's real.
Yeah, and so I just kind of put that on paper the next day. But I think, like, for us, Relentless is a lot of things. We're a faith-based team. We put our faith above everything else, including our business. And so I think it's to speak about being relentless in our faith and following and trusting God. But it's also being relentless in helping people and, getting people to their ultimate goal or their ultimate dream in buying a home.
Absolutely.
Gotta love that. That's realness right there. I definitely appreciate that. So today, guys, I guess we're in here. We're going to talk a little bit about the home buying process.
Yes.
As realtors, what do you guys obviously want to know on the lending side or just in general, and what do some of your clients ask you? What are some typical questions that they ask you guys?
Yeah. So I think one of the big ones we see is, especially with first-time home buyers, is they don't know where to start. So what does that process look like when they get into contact with us and we say, okay, I'm going to send you over to Lou and he's going to help you with your loan? What does that process look like with you, Lou? How do you get in contact with clients, and what does that first step look like?
So basically, typically, obviously, you get a referral from you guys or referral partners. At that point, first time home buyers, it's kind of cliche, but they don't know what they don't know. So sometimes you ask them, what questions do you have? 8 times out of 10, they don't have any questions because, again, they don't know what they don't know, right?
Yep.
So then I just say, hey, I always ask them because, you don't know if their mom, dad, sister, family has bought a home before. And, hey, what are some of the questions that they may have enlightened you on or asked you to ask me type of thing? And if they don't have them, I just, hey, no, not a big deal. I'll ask you a few questions. And then as we go through this process, if things spark, stop me mid-sentence, and I want to make sure I get those answered for you so don't forget the question, right?
Okay.
So typically we'll start off with that. And I just kind of typically ask the buyers what's their goal, because not everybody is in it for the same reasons. Some people want to buy it and end up renting it later. Some people want to buy it and live there forever. 100%. Some people want to flip it at some point, right? So I kind of want to ask them, what's your goal in this home ownership process?
Okay.
I'm looking for a place forever. Great. Now I know how to move forward and what to do next. And typically we'll start with, I always start with the $1 million question, because let's be honest, we would need to know that we have a deal or have something to move forward with. And if we don't, then I can give you an action plan on how to move forward after the fact, right? So First question for me is typically how do you feel your credit is? And I know people are on their heels about that question, right? Because they're like, oh, don't want to go there yet, especially if they're credit challenged.
And it's interesting today because it's so easy to figure out what your scores are more or less looking like. And let's be honest, I feel like a lot of us really do know.
Oh, you know.
But it's that taboo question, like, oh, man, hey.
You got to buy me a drink before you ask me that question.
You're asking me some personal stuff right now.
That's intrusive right now, it's like, can I get ice with that? No.
Yeah.
Cool that one down.
Yeah, please.
No, it's it's the credit question. They kind of want to, and like I said, some people will kind of fall back a little bit. And let's just say this: I've never met a person that had an 800 credit score that didn't know it.
Yeah, 100%.
Because why? They manage it, right?
Oh yeah.
And the folks that you ask, unfortunately, you'll say, hey, do you know your credit score? They say, no, I don't. You probably know. You just don't want to say. And some people are embarrassed, which I get, and I understand that. But at the same time, I'm doing this to help you. So either one, I can help you move forward with your credit the way it is, or two, if you have some credit challenge issues, I can figure that out once I pull your credit. I can see what's on it. Mm-hmm. I'm not a credit repair specialist by any means, but I've done this long enough to be dangerous, right?
Yeah.
So I can then look at their credit report and say, hey, this is what you can do to get your credit repair, credit scores up. I can't write letters and do all that credit bureau stuff, but as far as I can help you increase your score and tell you how to manage your credit and things to do to make yourself better moving forward and give you an action plan.
So give you an action plan and some pointers to people to help start that process of, hey, okay, I'm right here at 600 or 580 or 550, and I need to be to 580 or 620 or whatever it may be, and what do you charge for that, Lou? Is that something that you charge people for?
No,
like
that's
a credit
part of the
repair
process.
person?
That's part of the process. Like I said, credit repair people charge you to do action, right? They write letters for you. They do all the extra stuff.
Okay.
So they get paid for their work, right? Mm-hmm. I'm just relaying information and knowledge. I'm going to tell you how to do it, and then at that point, I kind of pass it back to you or refer you to a credit repair specialist, right?
Okay.
But 9 times out of 10, I can give you enough information to help yourself.
Wonderful.
So that's kind of the starting process is credit. Once you figure out the credit piece of it, at that point, we'll start to kind of dig into finances. That's what we're here for, right? Go into finances, figure out how much they're working with, whether it's liquid cash they have, whether it's 401k, where the assets are coming from. I ask those types of questions because then I want to know what they're working with overall. I'm still going to try to put you in the best scenario, but I need to know how much cash you have to work with, whether it's your own cash, gift money from family, or where the money's coming from. And then I know whether to pair you up with a true first-time home buyer with down payment assistance, or nope, mom and dad's going to give me a 10% down payment or whatever, that you don't necessarily need to go this route.
Oh, wonderful. So they could get a gift from family something like that, as long as it wasn't buried in the backyard.
Exactly. Yeah. You already know, man. That cash cream, right? Cash
Yeah,
cream,
right.
Not the cream effect. You can't use cash in the mortgage industry. And, cash is definitely frowned upon.
Yep.
So really, what you want to do is if there's a situation where you're getting gift funds, one has to come from a family member,
Okay.
or a close person that they fiance or somebody that's close to you as far as family.
Okay.
So that they look into that as far as guidelines. So cash, no, but a family member has to have that money. If it's cash they have in their account, it has to be seasoned for at least 60 days in their account before they can gift it, or if it's in your account, it needs to be there for 60 days.
Okay.
Obviously there's the Patriot Act and so forth that people are looking into, that, you can't just rob a bank and show up tomorrow and want to buy a house. They want to know where the money came from.
Need to clean it.
Clean it up, wash it up. That's what they do, man. But no, there's several programs, and like I said, once we determine what's going to work best, or at least get a direction for the buyers, which way they want to go, then I'll typically figure out how many programs are available for their situation, and at that point, I will basically give them options. I'm not going to force feed anybody a loan, right? So you always want to say, hey, you have option A and B. Here's pros and cons to each. If you have questions, I'm here to help answer those, but I'm not going to push them in either direction. If they ask for my opinion, I'll give it. But I typically want them to figure out what's best for them. But we give them all the meat and potatoes for the programs.
Yeah.
Right. And then that way they can say, no, I like this program. This is why.
So speaking of programs too, so let's say, because I get this one a lot as well, with first-time home buyers that are qualified for down payment assistance programs. Mm-hmm. Does that come with a higher rate? So if I get down payment assistance from an MFA program or an FHA program, is that going to give me a higher interest rate when I do that?
So one thing, let's take a step back on the FHA versus MFA thing, right? Because a lot of agents, a lot of people in general want to say FHA is for first-time home buyers, but it's not.
Yeah.
You can use FHA multiple times, because I've had that question. Well, I've already used FHA back in the past. I can't use it again. Yes, you can. You can use as much as you want. The difference is, so look at it like this, like a big umbrella, right? You have conventional loans and you have FHA loans.
Yep.
Those are going to be the investors. MFA is it's a side piece.
Yeah, okay.
Right?
It's just a side piece.
It's a side piece, really. It's really the MFA is the down payment essential that is coupled with either conventional loans or coupled with FHA.
Okay.
So it can work with either one of them. A lot of lenders only have FHA with MFA. Mm-hmm. We at a PRMI we can do both. So if you have a high enough credit score, you can couple an MFA loan with conventional.
Okay.
So it can help on appraisal issues or whatever, right?
Yeah.
So that's kind of how it works. And people they say, as soon as they hear FHA, they think first time home buyer. That's not the case. Mm-hmm. MFA is the first time home buyer piece. So that's when somebody says first time buyer, think MFA, don't think FHA or conventional.
Okay.
Two different things, right? So with that being said, the interest rates on conventional loans or FHA loans or standard loans that are not first-time homebuyer products fluctuate daily, hourly.
Yes.
Right? They just go up
Absolutely.
nonstop. MFA is a little different. They fluctuate. There has to be a big thing in the market for MFA rates to change. It's not a daily thing. Usually changes once a month, maybe, just depending on the market. If there's a big shakeup in the market, the rates will change. If there's no shakeup in the market, the rates will pretty much stay there. I've seen them stay there for 3 or 4 months at a time.
That's wonderful.
So the rates are great for that. Based on today's market, the MFA rate is lower than the standard rate on the standard market.
Wow. So somebody who's a first-time home buyer could come in and potentially get a better rate.
Yes. The only part that's higher is the down payment piece of it, right? So
which is a small portion.
Right. It's a small portion. So if it's say we're doing an FHA loan and it's 3.5% is a down payment.
Yep.
MFA is going to allow you to, I think it's 4% that they have now. So they're going to let you borrow 4%. And misnomer, it's not for free.
Yes.
It is good old USA, right? So nothing's for free.
Nothing free in this world.
So basically it's a 4% down payment assistance, which covers your down payment, right?
Okay.
That 4% that you're borrowing could be $5,000, $6,000, $7,000, whatever that piece is. Mm-hmm. That interest rate is higher.
Okay.
But that's a small portion, right? That's like the down payment piece of it. Versus if you're buying a $300,000 house, $10,000 is with MFA at whatever 8% it is right now, mm-hmm. and the $290,000 is going to be your base at 5.75 or whatever the current market is for MFA at that point.
Small percentages.
Like the bigger part is a higher rate, but it's a small loan.
Yes. Okay.
Yeah.
So I have a question. Now that we're kind of talking about interest rates, mm-hmm. what would you say in your position and your expertise to buyers who are hesitant about buying right now because of the interest rates being where they're at? I know, like within our side of things, being realtors, we give our
Roll the
insight,
dice.
which, you know, it could be different than yours because you are really, we have a 30,000-foot view of things, but you are kind of in the trenches within your industry. So what would you say to buyers?
As far as interest rate?
If they're being hesitant.
Okay, so you know, here's my real thing. If you're renting right now, you're paying 100% on your rate.
Ooh, that's good. Say that one more time, Lou.
If you are renting, you're paying 100% on your interest rate.
Wow.
Right? You get no return on investment ever.
Nothing.
You know, and if rates are 5, 6, 7%, yeah, they're higher than the 2 and 3s we had during COVID, but we had to have rates at 2 and 3% to keep the economy sparked, right?
Yes.
So rates are actually, to be honest, they're where they're supposed to be.
Okay.
You know what I mean? So I look at it like that because I've done loans for almost 20 years now, and I can remember selling somebody that had a 10% interest rate and had sold them a 7.5 interest rate, and it was the best thing since sliced bread.
Double-digit interest rate on their 30-year mortgage.
Yes.
That's, I mean,
You
that
know,
sounds
7%
insane, but-
don't sound so bad now,
to me,
huh?
it's not. I'm like, well, 7. I'm like 6.5, 7, 6.75. Yeah, that's not standard, but I mean, based on where the market should be, it should be. I would say rates should probably round out around 6%, 6.5. Like technically, however, people are comparing when our country's having issues, right, with COVID. They're looking to those. Well, rates are 3%. They're at 6% now. Yeah, it's doubled. I get it, but if COVID didn't happen, they would have never touched 3%.
Benefit of hindsight, right? Everything
2020.
looks better when we're looking through the rear view
2020.
because you can only see this much. But
Right, but going back to what you said, Brianna, the rate, you know, it's 100% on the rental rate, or you can jump in now at the 6.5 or whatever it is on the interest rate, pay that rate, and granted, it is higher than what you're used to seeing the past few years, but at the same time, what people aren't realizing, so I don't buy a house if it's 7%, that's just too high. And I'm like, well, then what are you going to turn around and go rent something tomorrow and pay 100%?
man, so that's huge. You're either rolling the dice and paying 100% of rent that you never get back.
That's also going to go up.
That's
almost
also going to
10%
go
annually,
up.
almost.
Yeah, and that's just historically 10% annually is what rent tends to go up for a lot of individuals, right?
Yep.
So you're either rolling the dice and waiting for rates to come down so you can buy a home, or you can get into the game right now. And if the rates do come down, then you're in a position to refinance with equity and looking in a better position.
Right. So the name of the game is get in the game, right?
Get
the
in.
game of real estate, because I've never met a real estate investor that's lost money in the long term.
In the long term, yeah.
You know, if you're fixing flipping, that's something different, right? But if you're going to buy a piece of property and sit on it for a little while, you will not lose. You may not gain or make as much as previous markets, but you're not going to lose.
Yeah.
But in renting, you're losing.
I mean, you're owning an asset that historically is not going to go down, and when it has come down, it's come back up tenfold.
Yeah, that's the beauty of it. It's what goes down will go back up.
Absolutely.
Right. So that's kind of how I look at it. When they say, well, their interest rate's too high, I say, well, look, I understand your hesitancy about doing this, but good thing is you get in now, and I don't think what a lot of buyers take into consideration is the equity portion. They're looking at, okay, at 7%, my payment's going to be higher. It is going to be higher, but you're also investing in a piece of real estate that's going to grow and make you money. So you may have spent $300,000 today at 7%, and then, like you said, 2 or 3 years later, if rates drop, you lower your rate from 7 to 6 or 6 to 5 or whatever that may be. It's not stuck for life. You can also refinance it.
The really interesting part about that too is when the interest rates do go back down, that's going to flood more buyers into the market, which makes your asset that you are holding more valuable. So when there's more buyers on the market, your asset that's not as available to everybody and there's a mass market looking for it becomes more valuable. So not only, yes, you could refinance and get a lower rate, but your home just went up in value.
Went up in value, right? So you look at that portion of it. So if you spend $300,000 on this piece of property at 7%, you're kind of questioning it, which, I mean, I get it. It's a valid concern, but at the same time, if it comes down, refi. If it doesn't come down, now your property 3 years from now is worth $330.
Absolutely.
Or 340, or whatever that number is, right? So I know Albuquerque was historically growing at a 3.5% clip.
Yep.
But as of now, the report on Albuquerque, New Mexico being this growing so fast, people are kind of skipping over Phoenix right now, too hot, leaving Denver because there's too much traffic and everything else is happening up there, right? It's
There's a lot.
congested, right? So people are kind of leaving those congested markets. People from California are skipping over Phoenix and coming straight here. We've seen a huge influx in our market here, right? So with all that being said, that's going to drive up the market price of houses.
100%.
So if you buy at 300, now it's worth 325, 350. And you start looking like, oh man, equity.
Yeah. I mean, I know before COVID, our average home value, or our average price of a home was sitting somewhere around 260 to 280 in that range. I mean, we're well over 350 now. I mean, I think we're sitting at somewhere like 375 to 390.
For a home that, yes,
Yeah.
because there's different neighborhoods, there's different places.
There
Whatever.
is.
But for the standard of what you're looking for, most people are looking for your 3 beds, 2 baths, 2-car garage. You're definitely north of 300,000. Whereas
100%.
before COVID, you're right around the 250, 260 mark. And now, finding a house under 300,000, and you guys know this better than I do. Finding a house under 300 is pretty tough.
Oh yeah, 100%. And I love that saying too, is that the best time to buy a house was 3 years ago, but the next best time to buy a house is right now.
I mean,
Get in the game.
if you like renting, I get it. If you're moving in 6 months or a year, I get it. You may want to rent, but if you're going to be here, your family's here, or your job's here, or whatever the case is, you're in Albuquerque, New Mexico, or wherever you are, at that point, buy a piece of real estate.
Yeah.
Because, I mean, if you're there for at least a couple of years, even if you break even, you're getting all the money back you put into it.
Yeah, 100%.
You know what I mean? Versus,
you broke even.
I'm renting for 2 years.
And I hope I get my deposit.
Yeah, hope. Like, there's a scratch on the paint, no deposit.
Yeah,
right?
no deposit. That's gone.
And also, you did a 12-month lease, and guess what? That $2,000 you're paying for rent is now $2,200.
Yep.
And if you don't want to pay it, they're going to bump you out because somebody else will pay it because there's a shortage of inventory on the rental side and on the purchase side, right? So it's a win-win for you to be solidified, get your home into get your family into a house.
Yep.
That you can call your own, paint whatever you want, do whatever you want, put holes in walls, don't put holes in walls, paint it blue, whatever you want to do.
Upgrade.
But it's yours.
Yeah. It's your canvas to do whatever you want with. So I got one last question for you, Lou. And I don't know if Brianna has some more, but what if I already own a house and I need to buy a second home? You had mentioned that I could do FHA programs multiple times. So what does that look like if I can do that?
So the deal with FHA, and this is probably a pretty important piece of this, is having multiple FHA loans. You can use FHA loans multiple times, but you can't have more than one FHA loan in the same city at once. And that's a trick to it, right? So people say, oh, well, I'm on an FHA loan now, and I want to go buy another one. So FHA is it's not built for investors.
So you can't hold that asset, rent it out, and then buy another home for yourself.
On a conventional loan, yes, but not on an FHA, right? Loan. Because it's not built for investors. Because typically FHA has a lower down payment. Mm-hmm. So when all this started, FHA is at 3.5% down payment. Conventional was at 5%. Mm-hmm. Right now, conventional has some other first-time buyer programs that are lower, but let's say typically it's 3.5% FHA, 5% conventional. Right. So what they're trying to circumvent the process is investors or people saying, "Let me get into this property for 3.5%." Live there for a year and then go buy another 3.5% and buy another 3.5% and circumvent the process, right?
Yes.
So that's why the government or FHA is saying, no, one in the same city, unless the only switch to that is if your family size changes, let's just say, right? So let's say you guys have a house, it's 2-bedroom, 1 bath.
Yep.
And then all of a sudden you're having quadruplets or whatever the case is. Like this house doesn't work, and you can prove that this house does not work for me anymore.
Yep.
You can now get another FHA loan because the situation has changed drastically. Not just I'm going from a 3-bedroom to a 4-bedroom. No.
Yeah,
but
it has to be something.
I have a 900 square foot house with the two of us because we were just a couple, and now we have a couple plus 4 babies. This doesn't work. So then that's enough. You can use an FHA loan in that instance, or if you're moving to a different city.
Interesting.
It's good to know.
So I think that's one of the biggest reasons why it's so important to talk to you and be upfront with everything that we possibly can when talking to your loan officer, because there's so many different options. You're not stuck. There's so many different things that can happen. It's not a one lane street to get to home ownership. I mean, there's so many different avenues that you could take.
The good thing is like you said, just talk to somebody. The good thing is it's free. Knowledge is free.
Always. You
know what I mean? So it's like just make the first step in making that call and asking somebody, hey, what can I do? What are my options?
Yep.
That doesn't cost anything at all. And some people, they clam up. I get it, because before I bought my first house, it was like, oh, what do I want to do? I want to buy this house. And, like we were talking earlier, I don't want to be into this house for 30 years or it's a big task.
Yes.
But like we said earlier, you're going to rent for 30 years. You need a roof over your head at some point.
Oh, yeah.
Why not own it?
Man, and I wish somebody would have sat me down and said that when I was younger. Single by myself, no kids yet. I wish, because then I would have an asset that I can control and do whatever I want with. Even if I refinanced take something
or
out.
It is, or roommates,
yeah,
or whatever, right?
Rent out rooms, all of that. But you have an asset that you can control, and moving on to your next stage in life. Yeah, okay, now I have this asset that I can refinance, change the loan program, move to something else, but take that money out of that and put it down towards something else.
Going back to what you were saying as far as the MFA portion and the person that wants to move up and buy another place or do something different, right?
Yes.
So to take a step back, MFA has two main programs, right, that are used. The first one's going to be for true first-time home buyers. And that's actually taking a step back. That's another big thing that people misconcept as well, is being a first-time home buyer doesn't mean, because some people said, I bought a house 10 years ago, I don't qualify.
Yeah.
Not so fast. It's 3 years.
So 3 years from your first-time home buyer.
So
program.
3 years from when you get out of home ownership. So let's say if you owned a home, you bought a house 5 years ago.
Okay.
And 3 years ago you sold.
Okay.
If you have not been in title or home ownership in 3 years, you requalify for first-time buyer.
Interesting. Okay.
That's good.
You know what I mean? So that's a major one that people don't realize. But then, so again, going back to that, the true first-time home buyer is called First Home, First Down with MFA. That program will assist you with a 4% down payment option.
Okay.
Right? Towards closing costs but these days it's just going to go towards your down payment. Right?
Yes.
So 4% towards that. And then if you are in a different situation to where you're like, hey, look, I've been living in this house, I want to move on because I have a 2-bedroom, 2-bath, and I bought this when I was single, and now I have a family, and I do want to move on, and you want to move up or move out. They have another program. It's called Home Forward.
Home Forward. Okay.
Home Forward is the one. So Home Forward will allow. Taking a step back, the first program has income limits as well.
Okay.
So for a true first-time home buyer, you haven't bought a house within the last 3 years, right, or been in ownership, and then for a 1 to 2 person household, the income limit is $79,750. If you have 3 people or more in that household, it goes up to $91,000 and change. It's $91,713, I believe, right, to be exact. Those are 2 scenarios. So the Home Forward program works for people who are not necessarily first-time home buyers.
Yes.
So with that being said, that program works a little different. Whereas the first program gives you 4% down payment, this one gives you 3%.
Okay.
So you got to have a little bit more skin in the game, a little bit. So then if you're doing FHA, minimum down payment is 3.5%. MFA is going to give you 3%, so you come out with 0.5% plus closing costs.
Not much.
Not much. You can definitely save that all.
I know ways that, depending on the market and the home that we choose, that we can work certain things into the deal too.
Right, with seller concessions and what have you, right? So another thing also what people don't realize, that say you work for a school or you work for the county or for however long, you're like, I don't have any cash. You probably have a 401k.
Yes.
Especially a lot of local New Mexicans, they get on the job and you see a lot of long tenure jobs, right?
Yes.
A lot of them have 401k. What people don't know is if you're a first-time home buyer, you can tap into your 401k for your down payment assistance and not have to use MFA at all if you didn't want to.
Man, I saw that when I was younger, in my early 20s, and I was working for a large corporation. And I never looked into it. But yeah, I had like 70 grand sitting there that I could have been,
tapped
I could
into,
use
right?
this to buy a house.
Exactly. So
I don't need it in my bank account.
No.
Let me check all of my assets and see what we have.
And see what you got. So, but moving back, the Home Forward is a really good program. That one's good because that lets you use an income up to $115,000.
Wow. Okay.
And you can be a first timer or not.
And in the state of New Mexico, I mean, that's up there.
Well, it is. No, that's handsome income for the state of New Mexico.
Absolutely.
And that's a household income, right? So, if you're a 115 household, that works perfectly fine, or whomever's going to be on the loan. So 115 is a handsome number to be able to be under to still get 3% down payment.
100%.
So, and if you're making $110,000, I mean, saving up closing costs ain't gonna be a problem.
Not too much. Yeah.
You know what I mean? As far as once you know what you're working towards.
Absolutely.
So that's kind of how the MFA programs and down payment works. Actually, at PRMI, we have another program that we just actually rolled out recently where it has no income limits.
Whoa. Okay.
And they get down payment assistance.
Really?
Call your boy.
Yeah, yeah.
But no,
Give the shameless plug.
I have to.
I love
man.
it.
I have to. So no, PRMI, we definitely a great program. Like I said, it's the down payment assistance comes with that as well. So if it's 3.5% on FHA, they'll give you 3.5% assistance.
Man,
So
okay.
so that's something to look for. That's not a non-MFA program, but it's something similar for people that make a lot of money but just haven't been able to save quite the down payment.
Yeah. Okay.
So
Good.
so the thing, I see the wheels turning over there. You guys got some.
Well, yeah, 100%. Always, man. I mean, and I'm thinking too. I mean, that's just a wonderful thing. You know so much about this, man. How long have you been doing this, Lou?
Man, about 20 years.
About 20 years.
Mm-hmm. 20 years on just lending. I did it kind of reverse, man, because most people start at a bank. You get your leads coming in. It kind of worked that way. I went straight on the broker side. It was sink or swim.
Yeah.
It was just like my broker at the time just said, here's the list of names. Start calling.
Pick
and I
up
was
the
like,
phone.
well, what information do I know about them? This is pre-Zillow, pre-everything, right? So I was
Oh.
like,
Oh,
I was
man.
like, what do you mean? She's like, I was like, what do I know? Like their name, address, what kind of loan they have. She's like, just start calling these people for refinances. And I was like, I don't know anything about them. She's like, I can tell you one thing. They're homeowners.
Yeah.
It's up to you to get the rest, right?
Yeah.
So that was my the sink or swim training.
Yeah.
But it
Trial
worked
by
out for
fire.
yeah, exactly. So, but it worked out for the best, right? Because I learned a lot at the broker side. I worked on the builder side for a local builder, nationwide builder, but locally here in Albuquerque, worked for a builder and their mortgage company. I've done that. Worked on the bank side, and now I'm with PRMI, which is correspondent lending.
Mm-hmm.
So what that means a lot is like brokers don't fund their own loans ever.
No.
It's you're a true middleman, which is perfectly fine. I've done that for a long time. No
Look for
shade there.
products.
Yeah, no shade there. And they're able to do that. But I have different products like brokers do as well. But the difference is the broker will never fund in their own name
Yes.
Mm-hmm.
ever. Whereas we fund, we retain servicing rights as well. So you can write your check to PRMI, not just before you get to closing, it's sold.
So that's huge.
So we retain a lot of that. We have our own in-house underwriting, so we have relationships with my processors, my underwriters, my closers. Good thing is at PRMI, we have everything in this building, so all decisions are made here.
So what does that mean? So everybody's here. Your underwriters, your processors.
When that file comes in this door, it doesn't leave.
So let's say somebody was supposed to call me and get some information. If I called you and said, "Hey Lou, we have a problem," you know who did that, and you could go talk to them right now.
Well, number one, I'll be honest with you, there is no problem.
Absolutely. Hey, there you go.
There you go.
Because no reason being is, man, we vet that out in the beginning. So
I
during
love it.
pre-qualification stage, if there's any what we call hair on the file or any difficulties, we pin that down before it even gets to underwriting.
Man,
I'm not
that's
going to give you a
huge.
pre-qualification letter to go shopping for somebody or throw it against the wall and hope it sticks.
That's huge.
That's not our motto. Our motto is, hey, if there's a problem with it, let's fix the problem and then send you out shopping. Because the way I feel, my pre-qual letter is gold. If I'm gonna give it to you and say, here, when you time to go shopping, I'm not worried about it not closing.
Man, that's so important. Because how devastating is it, babe? You've seen this. How devastating is it for people to say, "Yeah, I'm pre-qualified for X, Y, and Z," and they go out, and then we come to find out after we're in contract on a home already that there's a big problem. And they haven't verified funds or looked deeply into their credit, or they find out something is really strange there, and it's, "Oh yeah, don't worry about it right now. You told me you make this much and your credit score is this. Here's a letter. Go talk to your broker."
That's huge. I mean, for us, I think having that 30,000-foot view over a transaction, the lender is almost like the first and the last person that the buyer deals with. I mean, they deal with you throughout the entire transaction.
Yeah.
But in the beginning, you get incredibly, for lack of a better word, intimate with them.
I was
You
gonna
know
say,
their
it's
finances.
intimate.
You
We're in
know
bed. We're in bed for sure.
Yes.
you comb through that file, and then at the end, for like at least the second half of the transaction, the lender's driving the boat.
Yeah.
So
we're there to
how
be
many
friends.
times, is it that something happens that unfortunately went through the cracks on the lender side? And I mean, not to throw shade at out of state lenders or anything like that, but when you have it in house, the chances of that happening are minimized almost to.
Here, look, you have really good lenders that are online, right? We'll agree with that.
Oh, yes.
Here's the difference, though, in my opinion. The difference between an online lender, we'll call it even, right? An online lender is, one, they don't have to deal with the fact that somebody can show up to my door.
Mm-hmm.
If there's a problem with a loan,
Yeah.
agents, title, clients, I'm at 8300 Carmel. They can show up right here and like, what happened? And you have to answer to that.
Yeah.
If you're online or on the phone and things go left,
let me send you over to my customer service
right,
agent right
customers-
now.
and-
Well, they'll
Right.
help you out
and
right
you're
now.
out, right? I don't answer anybody. That's not my gig. Whereas here, it's a reputation game.
That's big.
I can't have my reputation being run through the mud, being like, hey, well, that guy over such and such is, did X, Y, Z to me, because we all work on reputation and referrals.
That's huge, man. Because I think that's the end goal for every broker and loan officer and title officers, everybody. We want people to come back to us. And, we were talking about this the other day, is I get excited when I have somebody give me good service. Mm-hmm. My sister was looking at buying couches, and I was like, oh, you got to go see my guy over here at XYZ because he did a really good job, and he helped us out, and he gave us a good deal. And this, you know what I'm saying? But I think all of us as humans, we're excited to tell people when we had a good service, but we're also really excited to tell people when we've had bad service.
Don't go there.
Don't ever go talk to this individual over here. You know what I mean? Like, and it happens.
And that's, as local real estate folks, that's not what you want. So I always advocate for working with somebody local, because you're 9 times out of 10 you're going to get probably better service because of a reputation thing. Mm-hmm. Not to say it's bulletproof, but that's kind of how I operate.
Yeah.
So
when somebody refers you business, I mean, that's a huge compliment. But yeah, you're like, oh yeah, those are my people. Absolutely, yeah. I wanted your family now too.
Look, you were saying, like, you don't want to with your clients in reputation and in doing right by them. I'm not going to send you into a contract situation and then all of a sudden, are there one-off situations that we don't know about? Sure. Mm-hmm. Like, for instance, if somebody has something that didn't show up on their credit report, but it's on their title.
Yes.
We don't have title up front. You know what I mean? So and those are really one-off situations. But as far as when it comes to the lending and underwriting process, there's very, very few times that I can even say ever that I've had a loan go into underwriting that didn't close.
Wow.
Because just our motto here at PRMI, and even prior institute I was with the same management team, that was just our goal. Was like, why would you send somebody out shopping on a whim? And then, like you said, take a step back. You guys have showed this client 15 houses, minimum an hour per time. That's 15 hours you've dealt with.
Yes.
This just for starters. So it's 15 hours of your time that you've lost, and let alone writing the contract, getting involved with the contract, getting the listing agent to say yes, I want to work with the Relentless team, right? And then what happens then?
Tarnished.
And then I guess the next time you get a pre-qual letter from John Doe and Relentless, they're going to be like, not so much. Last time they built it up on me, right?
Working on the listing side, yeah, there is times, where, you need to pick up the phone and talk to a lender. And if you know that this has happened before, hey man, do we have this? Like, are we good?
Right. Or situations happen. So my goal as a LO is to say, hey, look, this has some potential issues on it. Right. Mm-hmm. Like, for an example, let's say somebody calls up and says, hey, I make $100,000 a year. Like, great. A lot of people will say, oh, you make $100,000 a year, I'm going to give you a pre-qual letter.
Yes.
I'm
and
not
your credit
that guy.
score is 800?
I'm not that guy, right? I'm going to say, great, I'm glad you make $100,000 a year. What's the breakdown on that?
Yeah.
The second level of questioning is always the gold, right? No matter
Absolutely.
what you do. So I'm like, okay, well, how do you make your 100? Is it 50 commission, 50 base? Or is it all commission, all base? Like, I need to know these things, because if you tell me yours is commission income, I know I need a 2-year average.
Yes.
And you may have didn't make any income last year on commission because your job structure changed.
Okay.
Right. Yeah. So now you made 100 this year, but last year you only made 50. So you just started getting commission on your second year.
And we all get excited when you get a promotion or things change.
Right.
And
So
yes, this year I'm going to go buy a car.
But I need to know if you've been commissioned for 2 years or just 1 year.
See, and for buying a home, and let's be honest, man, it's important that we do these things, because then we're not put into a situation as a country too, like we were in 2008.
Yeah, things got hairy.
Let's
business.
You're approved. And then the market crashes because the majority of everything that we do as a country is propped up on housing.
A lot of it. So as you can tell with COVID, right? I mean, that's the only thing that kept it rolling.
Yeah.
So
I remember when they said we were essential, and you're still out showing homes, and we had new forms, we had to do masks. Yeah, you put on booties on your shoe, like everything. It was crazy.
Yeah, it's definitely a trying situation, but like I said, we want to take the guesswork out of it, right? So by the time you're shopping for a home, one, we want this to be the most exciting period for you as a client. As a buyer, I want you excited. I want you to know that there's nothing going to happen moving forward, right? It could be appraisals or inspections or whatever, things that you can't control. But
But
as
it's
far
not
as
going to be
your
from your
financing,
lender.
yeah, your financing part of it needs to know, like if the house falls through, you're still good to get another one.
Yes.
You know, it's
Which is
not
big.
like, oh, I just found out that you only had commission for 12 months or now we can't make this work. No, not here. Not here.
That's, it's huge. Like buying a house, obviously, as most consumers know, is a huge deal and might be the biggest deal of their life, right?
Uh-huh.
But like if something messes up in the middle of that transaction, it's not like an oops, like someone messed up my food at a restaurant.
Yeah.
This is
Yeah.
I mean, this is someone's livelihood. Like
Yeah.
you see it all the time of people, moving out of their house expecting to move into their new house and if you don't have a strong lender who's able to back you and support you in that, I mean, that's bad.
Yeah, real estate agent too.
Yeah.
You know, because there's a bunch of crafty ways in today's market when you're looking at, okay, we have 600 to 800 homes on market that are, okay, and then now we're looking at, oh, we only want 3 bedroom, we only want 2 bath, I have to have a 2-car garage, oh, and I need a yard. Okay, now we're down to now we're down to like 200. Okay, now there's multiple buyers, and now you're in a multiple offer situation. But if I know, okay, my lending side is good to go, I don't have to worry about that. Now we just got to get crafty on how we structure this offer, how we talk to the other side as well, because it's hand in hand, man. This is a relationship business. The
Across the
paperwork and all the other stuff is the easiest part when it comes down to it. But if you have a bad reputation,
that's the hardest part.
That's the hardest part.
But if you knock that out in the pre-qual stage, then give me your W-2s, tax returns. I asked for the kitchen sink, right?
you should.
The reason why is because through the process, I don't want to come back to you and say, oh, by the way, can you get me this? Oh, by the way, can you give me this? And then what happens? The client now calls Relentless and says, why does this guy keep asking me for documentation?
Yeah.
Yeah.
Or, hey, I thought I gave this to him.
Right.
He asked me for all this, and now he's asking, why is he
Again.
every week? Yeah, it's
It shows unorganized. You know what's going on. So at this point, I asked for the kitchen sink, and if I don't need it all because some programs don't require tax returns, but I asked for it anyway, up front, right?
That's huge.
Because the clients don't know any better, to be honest. I give them a checklist on what to do and what to provide, and then if I don't need it, I put it in a backup file. I don't show the underwriter everything that they need to see. Because when you do what's called an AUS, which is automated underwriting system, it'll tell you what you need. Sometimes it says 2 years tax returns. Sometimes it says 1 year or no years. You read it at the very end, and if they don't need it, I just file it away. And then if something comes up later that, hey, guess, by the way, they own a business, so we do need those tax returns.
You're
and
not
they didn't
calling.
tell us. And then I'm not calling them saying, hey, I need those tax returns. I'm
Yeah.
like, guess what? Oh,
Hey,
I got them right
Mr.
here.
Customer.
Right.
I already have them. So
Remember when I said we did everything right away?
like, by the way, Control Alt Delete. No.
Yeah. Yeah, please come back.
But no, man, it's really setting. I honestly, I think it's setting the right expectation from jump.
I love it.
If you tell them what you need, and then I tell them what I need and why.
Yeah.
Like, hey, I need
There
your
should
tax
always be a
returns
why.
because of X, Y, and Z. And if you provide people the information, then they want to, well, why do you need my bank statements? Because like, what do you mean? I'm like, well, we're about to give you $300,000.
I think feeling comfortable with the people that are in your corner is huge,
Yeah.
right? You shouldn't have to feel like you can't trust them for whatever reason.
If that's a problem.
So yeah, I think there should always be a why.
And you know what? That's an interesting point too, because it may be different for different individuals, right? Like we've helped family members get loans or buy homes or whatever it may be. But I've also, Lou, we have a client right now that we're working with that literally said to us, well, I don't want to work business with family. I want professional individuals that I can trust on that level differently. And that's who I want to work with.
And
You know
I
what I
remember he told me that he was like, no, I had a family member involved, but.
Yeah, but.
Yeah, I mean, it's dicey. You don't see, because I can see how many times you went to Starbucks, right?
Yeah.
I can see.
Yes.
Or wherever she may go, right? Like, who knows? But, you show a lot of information on that aspect. So, some people are okay with it. Some people are not.
There it is again. Intimate. It's
Very.
an intimate situation.
But no.
And there's certain things that we don't know on our side, right? Like that's the important thing is that it stops with you. It's confidential information
100%.
for an individual, and you're not calling me or the other side or whoever else and giving out this information. It is confidential.
So,
We just know what you're approved for and how we need to get it done, and that's how we structure our side of it.
technically, loan officers can't give agents credit scores. I don't know if you know that. Some do, unfortunately, but I keep everything highly confidential. I say either they're at the threshold to qualify, or they're beneath the threshold. But I don't give a number as far as what their credit is, what's on their credit. If there's something on there, I'll say, hey, look, there's some credit infractions on there that I need to talk to the client about. I'll get back with you, and then I'll let the client know what the scenario is. I'll say, hey, by the way, this is confidential information. I can release it to your agent if you're okay with that, or you can feel free to do that as well, or we can keep it private. And if they give me the green light to talk to you, then I'll talk to you. If there's no green light, sorry.
Yeah.
And some people, just throw up at the mouth and give all kinds of information out. Like, that's against code.
And let's be honest, man. I don't need to know everything.
And you don't. It's like,
hey, if you call me, do they qualify? This is what we're looking at. Can they get 350? And their interest rate is what? What kind of loan are they doing?
What's their max?
Because that's pertinent to us writing a contract.
5% down, 10% down. How to write your down payments?
100%.
So no, that makes a lot of sense. And I was like working as a triangle, if you will, client, agent, and myself working together at this deal, because let's be honest, not everybody knows everything.
No.
So let's just say you had a situation in the past that bellied up for whatever reason, right?
Yes.
And then, but you knew that information. Whereas, let's say if I hadn't been through that situation, but if we're all in the same page, you'd be like, no, we can do this because I had a situation like this in East Mountains and the septic was wrong, and we can do it, and this is how I got over it before. I may not have done a loan in the East Mountains before, right? But if we're all on the same page, using each other's knowledge, we're like, no, we can make this work.
Yes.
So that's why I like being able to have everything open with all three entities, and actually, if you want to four-way that out and make it a square, title as well.
Yeah. I mean, they are an invaluable resource when it comes to a lot of stuff, and getting all of that. All the paperwork comes into them from lender, from real estate agents, from the county and the state. Everything is going to come into them, and they're going to organize it and get us all closed and signing. But that's what we're all trying to get to.
For sure. How about you, Bree? What's going on?
I think just a good kind of question to close with, Lou, is this was a really good conversation, and it was a lot of information.
That's what we do.
We have heated conversations in this room. No, but I mean, it's a lot of information, and where it was very, very clear information, I think, and very transparent information, especially for someone who's never gone down the path of buying a home before. It's a lot of information. What would you say to someone who considers this entire process to be overwhelming?
Ooh.
If you're in touch with an agent first, or whomever refers you to the loan officer, big thing is they referred you to a specific loan officer. Granted, you can shop around to whomever you want.
Yes.
Right? But at the same time, if somebody's referring you to somebody, usually it's for a reason, because they trust that person, they provide a good service. So one, you can take your guard down a little bit because you're being referred to a person for a reason.
Yeah.
If you don't feel comfortable with that person, then obviously do due diligence and move on. But number one, I think if I'm a client buying a house, I want to be comfortable with my agent. I want to be comfortable with my loan officer.
Yeah.
Regardless of the rate, if somebody says, "Oh, I can get you a better rate," blah blah blah, it's not always about rate, because as we know, if you want to go out and buy yourself an S550 Benz or whatever the case is, the quality is going to be better.
Yes.
Right. So you don't always get the best service in the lowest rate. That usually kind of doesn't go hand in hand, to be honest. That's
Absolutely.
Just being 100 with everybody.
I'm a big advocate of you get what you pay for.
You get what you pay for. I mean, if you do, like we were talking about earlier, if you do the online lender thing, right? A lot of persons are going to be on the other end of the phone, take your information, just plug in application stuff, name, address, and then slap, it goes to the next person. And then you're out. You never talk to the same person twice.
Yes.
So you're probably going to get a better rate. But are you going to make closing on time?
Yeah.
Are you get the proper information? And then at that point, how comfortable are you with calling that 800 number and going down that road?
Yeah.
Right.
Versus being able to be like, hey, you know what? I don't understand this. If you don't, like when you guys came in today, you're in the lobby. I had a client in here earlier, right?
Yes.
She was having trouble with her online disclosures on her computer. It wasn't pulling up properly. We were able to say, well, why don't you just come in?
Yeah.
And we walked her through it. You're not going to get that online.
Biggest
Can't.
difference.
So now she's leaving here
That's huge.
super comfortable about what she's doing.
That's
Answer
huge.
questions along the way as well, right? So that's what we look for is one, just be comfortable with the people you're working with, because some people are not comfortable, so then they won't ask those follow-up questions, right? They're gonna be like, well,
And that creates that anxiety, that
and then you
unsure
don't
of
want to move forward
yourself,
the
and
process
everything
because
else.
you're not comfortable.
100%.
So I
Yeah,
just
and
make
that-
sure. Go ahead.
No, I was just gonna say, I'm huge. Like, yeah, I refer people to Lou, but we have relationships with multiple lenders.
Mm-hmm.
And I tell people too, interview a couple if you want to, shop around, and I'm big on that for us as well. Shop multiple realtors. I tell people, hey, don't use me. Give me a chance to interview with you,
Yeah.
and we'll see if we're a good fit for each other.
Well,
Because it's a two-way street.
Don't give me the business. Let me earn it. Right.
Let me earn
Yeah.
your
Earn
your
business,
business.
yeah, and show you why we are the best.
Well, what JP meant to say was, I'm his number one agent, but not his only
Hey,
agent.
come on, baby. You my main piece. We say, hey, you always got a
But
side piece.
Always,
on the
always,
way.
man. Side piece is where it's at. No, man. I get it. I mean, like I said, it's you have to, whether it's personalities or whatever the deal is. People have multiple partners for whatever situation. But obviously, we're in this to earn your business as well as everybody else's.
Yeah.
And do the best we can. Whether it's shifting gears and slowing it down and making sure people are comfortable with what they're doing, what they're buying, and why they're buying.
Yeah.
Like I'll go over a loan product. Like I said, say for instance, if you guys had never done a USDA rural program, I'm not going to give you a crash course on all the programs, but I'm going to tell you about this specific one, right?
Yeah.
As we go through the process, as I do with clients, right? They're going to say, hey, well, how does this MFA program work? Or how does this VA loan work? I'm going to, as we go through it, I'm going to educate you on what you're doing.
Yes.
VA, mandates this and this is why. Like, so when you leave me or once you close a loan with me, you're going to be like, I know what I'm doing. I know the loan process.
It's huge.
Man, yeah.
Some
It's a
people
team
throw it
that's
against the
working
wall, right?
for
Like, hey,
you.
here's your payments, $1,500. I'll see you at closing.
Yeah. See you there.
I'm not that
Good
person.
luck.
Like, it's $1,500. Why? Let's back out. $500 could be your escrow, like taxes, insurances.
Yes.
It goes to an escrow account. This is why. Every 6 months you're going to get a tax bill, but don't pay it because some people
Yep.
they call and say, "Why did I get this bill? Why did I get this bill?
Well, they have to send it
$800
to
for
you.
my insurance
Yeah.
bill, right?" I'm like, well, but if they know that prior, you stop the phone calls, and that's why I
Yes.
learned early in my career was I know what I'm doing,
And
but they don't.
and then it's your follow-up call or my follow-up call saying, how are things? How are you?
I want to follow up to see
How
how
are
you're
you doing?
not because there's a problem.
Yeah, how's
Right.
the kids? How's the dog? Hey, Rufus, he's
Roof.
doing all right. Yeah.
Hey, Snoop.
How was the housewarming party? Did y'all get crazy?
Yeah, like if you make that call, you shouldn't feel like you're opening a can of worms.
Right.
Oh man,
It should be
yeah.
a genuine phone call.
That's the
closed
worst.
3 months ago. It was just a touch, right? Like, oh, your anniversary. Like, hey, how things going? Whatever. But as far as a loan, it's like, hey, this is going to happen when you close. You're going to get stuff in the mail. We just sell your information.
Yeah.
It's public information that a property changed hands. So just expect your Home Depots and everybody else to send you flyers or credit card offers or whatever else.
Yes.
But I explain all that through the process.
Because not a lot of it is public information, but the fact that you purchased a home and recorded your
Changes
name as a
hands.
new deed,
Boom.
that's what is public.
Yep.
The rest of it isn't.
You're a homeowner now.
You're a homeowner, so yeah, it's public knowledge.
Yep. So that's, I try to, like I said, educate the people through that process so they know what to expect and when to expect. And it just cuts down on those types of calls. I'm always available, obviously, to answer any questions, but I feel like if you educate your people on the way through, and then when they do get that pink slip from your insurance saying annual bill due of $1,200 for your annual insurance,
Yeah.
they're not going to freak out like, $1,200, what?
Yeah, where did this come
And then
from?
they call me, like, or call whomever, like, what do you mean $1,200? No, well, then it's more this is what he was talking about.
Yes, they already know.
So-
And that kind of kickstarts that, right? I know me, I'm a forgetful person and I can't come up with stuff on my own. But if I have something that kickstarts, oh yeah, no, you know what,
But
Lou
you'll
did
tie
tell
it
me
together.
about
Like,
that.
this is the bill he told me not to pay. 'Cause
Yes.
the lender's going to pay it, right?
Yes.
So that's all kind of just like I said. The education process is the big thing to make people feel more comfortable. What you're talking about, Bree, is the comfort level is huge buying a house.
Absolutely, and that's and obviously this sounds like a plug for ourselves when
Of
it
course it
comes
is.
down to it, which it is, but. Right, I'll have some statistics to help back that up.
Uh-huh.
Right, is the majority of home buyers when they're starting their process, they go to Zillow and they start searching, and then they get fed people that are doing what they can to be put in front of them by paying Zillow to be put in front of them,
Right.
whether it's real estate agents or lenders. But honestly, as somebody who's been in this business for multiple years and seen both sides of it and been all over the place, if you're going to buy a home, my first step would be to talk to a couple of different real estate agents or ask your friends and family who they would recommend to you.
Right.
Yeah, or who you like because you've seen them online. We have a, fairly good online presence. Talk to those individuals because a lot of it does start with the real estate broker because we have the lender that we like to work with. We have title officers that we like to work with.
Uh-huh.
We have people that do security that we like to work with, right? That have given good service to our clients because as we say in our motto of our team and our branding is we put people before properties and service before sales. So we have so many different things that we like to tie into that.
Love it.
Right? So the whole process is a team of individuals trying to get you to the closing table so you can be a homeowner.
A big proponent of that also with the team that you select is availability, people.
Wow.
Hey.
Hey, did you know that the number one complaint that people had about their real estate agents this last year, NAR did a statistics on it, was that they didn't answer their phone. 87% of people said that their broker didn't answer their phone.
Well, the funny part about that is we all have them, and they're close to us.
Yeah,
You don't leave
sitting
home-
right here in front of us.
It's like our Amex. You don't leave home without it. So
No.
being able to not call back, I don't understand that.
And man, come on. We all know.
Come
We
on,
all
man.
know that we have our phone, dude. You'll be
Everybody
late
does.
to school or work or anything to
I'm
go
turning
back
around
home
to go home to get it.
to get my phone.
Yeah. Yeah,
Everybody
all day,
does that.
all day.
It's become an attachment to us so much.
It's part of us,
Answer
right?
your phone. And if I don't answer your phone call, I hit that. I'll call you right back.
Yeah, yeah, exactly. Like, hey, I'm in a meeting or whatever the case is. I just tell people all the time, you can shop for the lowest penny pinch rate ever. Can you contact them on a Saturday night at 8:00 to get a pre-qual letter?
Man, I don't think I've ever called Lou without getting a response instantaneously. If he didn't pick up the phone, he texted me before I even hang up the phone.
And I mean, sometimes you'll call him and you get this, and you're like what? But he
That's
answers.
you.
Yeah, maybe that's just me. I mean, when I call him, I guess.
Hey, he
so.
always answers the
But
phone.
he
He said,
answers.
Jay Pizzle.
I was like, it's like after this phone ring, I'm like, what it do?
Yeah, what's happening?
But no, man, it's I guess my claim to fame is the best ability is availability.
It's
Wow, that's good. Say
And
that
I
again.
mean, like,
The best ability is availability.
Woo.
Because it
So
doesn't
good.
work if you're out here and you have somebody that wants to get pre-qualified and your lender's not answering. Guess what? There's no pre-qualification.
I've had that.
So if both parties are available, whether it's Sunday morning at 8:00, I got to put an offer. Saturday night at 8:00, got to put an offer. If my phone rings and I see it ringing, there's no way I'm not like, oh, I'll call later. Nope, not gonna do it.
Testament to you too is that you answered my phone call the other day when you had COVID at home.
Had COVID, and I was like,
hey,
you
I'll
mean?
call her.
Yeah.
I'll call her. Just give me, I'll call her.
Let me stretch out. Yeah. But I
Let me sit up in the bed and I'll call her.
You wipe the eyes out. Wash the face.
I got to do something, but I got to call her. I'll do it.
But that's the name of the game because truly we're all in the same reason. The reason is you want to help people get into a house.
Yeah,
If you don't want to help people, it'll show.
it does. If you're in this just to make money,
Yep, it'll show at some point because
and then you won't make money.
because you put everybody as a file.
Yeah.
As a
you're
number.
like
Everyone's a number.
Well, in the beginning of my career, I did that. I was like, I want to make a certain amount of money. I knew how many files I had to make to get this number.
Yep.
I reverse engineered everything. So okay, this is the income
I've
I
done
need
that business
for the
plan.
annually. So divided by 12 months, I need to make this. I need to make this many files to get this, and every was a number.
Yep.
And I couldn't break through a certain threshold, right?
Mm-hmm.
And then when I changed teams and got proper management, shout out to our ownership here, got with the right manager, that was broken down because I was making my numbers, but I couldn't exceed. I couldn't break through the ceiling.
He's huge. He's sharp.
And basically what I got from that was be the best loan officer you can be and do it for the right reasons, and you'll see your numbers increase. And I was like,
Everything
Wow.
will take place.
that's BS, right? I was like, come on, man, that's not the. He was like, trust me, be the best loan officer you can be, meaning respond to people, make sure you're doing the right thing. Don't walk that gray area. Make sure it's black and white, and make sure
Wow.
people understand. Be the best loan officer you can be, meaning best service.
Yes.
Not looking how many deals can I close, but give the best service
Yeah.
and be the best person you can be, and all that will go away.
Yeah, because it's great if I worked with 100 people this year, but I never talk to them again. And then I have to find 100
Retention
more.
is
Then
huge.
you're
Referrals
But
are
you're going to
huge.
run out of people.
Well, then you're transactional. You're not
You're
relationship based,
yes.
right? So when I
And it's a
changed my
relationship
mindset
business.
from how much money do I want to make versus how many families can I help, that's a big one, because some people call, how many leads did you get? So I've changed that from saying leads to opportunities.
One of my old team leaders, a really sharp cat, one of the best things I ever heard him say when we were talking about real estate and how this works is that we're in the relationship acquisition business.
Period.
I'm here to get relationships and create relationships with people. But when their life changes and they're here to do something real estate related, I'm the one that they think of.
Yeah, that's the name of the game, is, like I said, just treat people like you want to be treated, with respect and service. Like, do you want to be sitting on the phone waiting for 2 or 3 days for somebody to call you back?
No.
See, and I think that's powerful because, and you even kind of were transparent about it just now too, and it's nothing to be ashamed about. I think anybody within our general industry, like within real estate, if you ask any relatively new, maybe, dare I say, real estate broker, why they got into the business, they're all going to say to make money.
Right.
That was why I got into the business. That was why you got into the business. You
Yeah.
mentioned that's why you got into the business. But I think at some point in time in your career, if that doesn't shift to because you care about people, then you're doing it wrong. And I think if you have a broker or a lender or whoever it is, and they're not picking up their phone for you, they don't care about you.
Ooh, it's the person, right? Because you're like, I don't know. Look, if you guys call me and I'm not responding, you're not. Maybe JP's calling me for go for some donuts or something. But
Yeah.
but most of the time, if an agent is calling a lender at all, you need something,
Yeah.
right? So you
Right.
you have a question or what you need something. If a client's calling you, they're not calling you to go for a beer. They need questions like whether it's your loan, pre-qual, or whatever. They need something.
Yes.
Fulfill that need,
Yes.
because I promise you, if you don't answer or you don't call back, they will call somebody else.
Oh, yeah.
You know what I
And
mean?
man, that's a wonderful thing to have your phone ring and people say,
Right.
hey, I would like for you to assist me in this need.
Right.
Right.
You're not outbound calling. Somebody's calling you. I'm like, that's
I
a
don't
win.
have to
That's
sit
a
in front of
dream.
my phone, for
Win-win.
6 hours calling random people all day. Like,
right.
oh, wow.
No, it's.
I still remember my very first referral that I got from past clients, and they called me and, hey, man, no, and it was weird. I show up ready for a listing
Cheesing
presentation. Yeah, I show up ready to do a listing presentation, and they're like, "Oh man, like, we need to get into logistics. You're
We're
not here
rolling.
selling
Yeah,
us.
we're
Yeah,
rolling.
we're going.
Yeah,
like,
yeah.
you're my guy." I was like, "This is amazing."
That's how this game
This is-
works.
yeah.
Yeah.
Hold up.
Hey, no.
Yeah, hold up.
I was like, get my Nate dog off for a second.
Yeah. Don't put the mic in front of me.
So no, man, it's been a pleasure having you guys. Again, this is JP and Brianna Peters, husband and wife team with Relentless Real Estate.
Yes, sir.
Looking forward to working with you guys more in the future.
Absolutely.
We'll put together some more information for you guys. Like I said, we talked a lot about MFA and first-time home buyers and also move-up buyers, which JP mentioned earlier.
Yes.
We'll come at you with some additional information to kind of help. I was just provide knowledge for the home buying process. So look forward to work with you guys in
we'll
the
be
future. And we'll go from there. I want to close out with one thing from each of you. It could be the same. It could be different. Hopefully it's different. I'm going to ask you guys this surprise question. You guys weren't
I'm
expecting
nervous.
this, all right?
Let's go.
It's going.
Let's
going.
go.
He's ready
I'm
for
scared.
it. So I'll start with JP, then we'll move on to Brianna.
Right. You're the guinea pig.
What's your favorite local restaurant?
Ooh, that's a good one
All
because
right,
we
man.
just hit a new spot that I really like.
We'll start with maybe not your favorite. What is that? Throw it out there.
Okay, so that's that Nashville chili chicken spot on
did hit me
Eubank
with
and
that. You hit me with
Candelaria.
that. I love
That
it. I
chicken
love
and
it.
waffles. We just posted it on our Facebook a couple days ago.
Okay. All right.
Banging.
All right. Super.
Banging.
Okay.
But man, I'm a pizza lover, and honestly, one of my favorite restaurants
go.
in town is Caruso's. It's on
Manal.
Manal. Little hole in the wall, been there for years, and they just switched owners because the owners were family business. My dad ate there when he was in high school, and now I've taken
I've
my
never had
kids
their
there,
pizza.
dude. It's so cool, and it's a cool thing, right? Like my dad came here when he was a kid. He brought me here when I was a kid, and now I'm taking my kids
Third
there.
generation on that.
Dude, yeah,
Okay.
it's a cool thing, but that's my favorite Caruso's.
I've seen it. I've been there. I've been
So
past
good.
it 100 times, but I've never stopped to eat there because 2 doors down, There used to be a Japanese restaurant called Kokoro.
Yes.
Unfortunately, it closed.
Yes.
And now it's called Little Pookies, I think it's called. Los Pookies.
Los Pookies, I think,
And
is
they
yeah.
do birria tacos.
Mm-hmm.
Smacking.
Yeah, they're
Taco
so-
Tuesday, $2, birria tacos.
What?
2 doors down from Crusoe's.
Okay. See, and
Don't act all
Crusoe's just
happy. You
got
don't
bought
eat
by.
burrito tacos.
I like
You do
burrito
not eat
tacos.
Why do we never go get any?
You're on the hook
You
now.
let me know.
What is
But-
it? That too.
Yeah, that's the
Bro,
one.
yeah.
Thank you.
Yeah, I'm working on my New Mexican, my Spanish right now.
Yeah.
What is it, Daniel? Birria. That's it.
Birria.
I'm going BR.
But you know what, man?
BR
yeah.
BR tacos.
You know what's funny? Speaking of that, and I like that you said local too, is because we have the 2 Raising Cane's coming and stuff now too. Like we've become really big on like
Yeah,
Go to a little
that's-
spot.
No,
keep-
mom and
keep it
pop
going.
shops.
a
Yeah.
little spot, and I promise you'll be surprised.
So Pizza Caruso's, moving on. Bree, what you got? Favorite local?
Something Mexican.
Totally Mexican.
You're
She's a
all-
Mexican
you're like-
restaurant
you're all like-
all day.
I'm brown. My
505?
maiden name is Parra,
Okay.
so I went from Parra to Peters.
That's right.
Para Peters?
Parra Peters.
Represent.
So I don't have one, but I have to go with Mexican food, and I have to go with like our local. I'm always at either like Little Anita's or Garcia's or Papa Felipe's or Los Cuates. I mean,
Los Cuates.
Los
That's
Cuates.
also
Los
fire.
Cuates is
That's that's,
so
yeah.
any of those.
Okay. That works. That works. Love it. All right. Well, thank you guys.
Hey, well, no, what's your spot?
Oh.
Yeah.
I gotta know your spot.
Oh.
Yeah.
Oh, you ain't
Um,
off the hook.
You know, I'm thinking because that pizza, my son's a pizza lover, so now I'm just trying to find the best pizza spots. Now I have another one. Favorite local New Mexican spot. It changes weekly, man. But right
You know
now,
what? That
I'm gonna
Kolache
go
you
with
hit us
the
up with too.
Kolache Factor. I think it's local. I'm not sure, but the food's legit.
Yeah.
For breakfast and lunch. I would say, as of lately, man, I've been hitting 2 spots. One just opened up across the street from my house. It's called K Style Kitchen. It's a Korean kitchen,
Okay.
and they always have that like beef bulgogi stuff that you can get, but they make a beef bulgogi sub.
Oh, okay.
That's legit. And then the other one, going out because my son loves pot stickers. We hit 2 spots. Ginger on the west side.
Ginger. Yep.
There's 2 in town, I believe, but the
Yes.
one on the west side. I frequent that. The ribs, legit. Asian
Yeah.
style ribs are just.
Oh,
that's-
dude,
yeah,
Asian spare ribs.
yeah,
I used to go to
yeah.
PF Chang's and get those all the time.
Game changer. So I was going Ginger, and then right by my house also is Thai Borin. So
Okay.
I'm on the Asian food kick right now.
You know what you would
Alright.
like then? Kamikaze Kitchen off of Comanche in Wyoming.
Kamikaze.
It's a southwestern Asian fusion food,
Kamikaze.
bro. So they have
Dang.
like green chili egg rolls and stuff like
They
that.
have
yeah.
tacos.
You'll like it.
Ooh, green chili egg rolls.
Yeah, fortune cookie fried chicken, all kinds of good stuff.
Now you're gonna tell me they go have collard green fried chickens next, right?
Hey, they might. Watch out now. Well,
All
thank
right.
you guys. Yeah, thank you for having us, Lou.
Yep.
We appreciate it, man, and we're happy to do this again.
Absolutely. Looking forward to it. Thanks, guys.
Yeah.